Joining us now to talk more about the state of the economy and the Fed's view of it, former Cleveland Fed President Loretta Mester. She's an adjunct finance professor at Penn's Wharton School and a CNBC contributor. And it's great to have you on, as it always is, President Mester. But I guess I'd start with some of the recent inflation numbers that we've seen. I think that it was the third straight month where maybe you could make a case that it stopped moderating. Most people think it's still in a downward trajectory and it'll resume and maybe we can get some rate cuts. Do you feel that it's ready to start a downward trajectory again, or will we have a fourth straight month of hotter numbers?
Yeah, Joe, I mean, I guess I'm concerned about the inflation progress. I think it has stalled. I think long term, it's going to probably move back down. But I think the Fed's right in being cautious here and not, wanting to keep moving the interest rates down as they had planned to do. So I think they're right to be cautious. We'll have to see. We saw a similar kind of stall out at the beginning of last year, and the Fed was concerned about it. And then later on in the year, it did move back down again. So it could be seasonality. It could be concerns about tariffs. It could be a lot of things that are affecting the inflation numbers. We'll just kind of have to wait and see. But I do think the Fed's right in terms of, there's no compelling reason, even if you put aside fiscal policy, there's really no compelling reason right now to be moving rates down. There's, a strong economy on the real side. Growth is really above trend, and it's been above trend for 2 years. And labor markets, they're in better balance now, but they're still pretty solid labor market statistics. So again, there's no real reason for the Fed to be moving rates down at this point. And then if you add to that, it isn't clear to me, at least, and I think to a lot of observers, just how restrictive policy is at these levels, because I think the neutral rate is moved up over time. So again, good reasons aside from what you could imagine about what's going to happen with fiscal policy, to be here just pausing and letting for things to clarify a little bit in terms of where the economy is going, both on the inflation side and the employment side.
For inflation to get to the Fed's target, and you don't think they're going to move the goalpost, it would be bad. 3% is different than 2. 2.5% is different than 2. Do we need weakness? Do we need the unemployment rate to go higher to get inflation to where we want it to be?
No, I don't think you do, Joe. Maybe a little bit higher. If you look at the Fed forecast and other private sector forecasts, it moves up a little bit, but it does stay solid. It's not like, people thinking that, wow, we're going to have to crash the economy to get inflation down. And that's why the Fed has been willing to tolerate the slow decline. If you look at the latest projections from the Fed, it took an extra year to get back to 2%. They're committed to doing it, but they're willing to let it go slowly because they are concerned about the labor market. They don't want to harm the labor market. So that's the Fed's role, is it has to balance those two goals, has to keep both in scope, and it has to manage that and keep its policy rate well calibrated to where the economy might go. They did some hard work of doing that calibration. We didn't move it up quickly enough, and therefore we had to go really quickly at the start of the tightening cycle, but that recalibrated policy to high inflation. Now, with inflation having moved down, not all the way to goal, they started to move the rate down. But this is a good place to pause while things play out, so you have a better view of where policy needs to go. They're in a good position because they can pivot either way, but that's their job right now, is they got to keep policy well positioned so that they can handle things as it plays out.
If you can't sleep tonight, is it going to be because of inflation being stickier, or the economy maybe starting to weaken, or the animal spirits that we're seeing from all this deregulation? Will that keep us going?
Well, it certainly is true when you talk to business people that, coming into this year, they were very, very happy with where things were going. They expected deregulation to be really a boost for growth over the longer run, allowing them to innovate faster. There's no doubt about that. I still talk to business people, and what I'm hearing is they're very cautious about the tariff situation. And I think in your earlier segment, I think Steve Leisman said, business people just want to know where the goalposts are. They want to know the rules of the game. And right now, they don't feel they know it. And so they are pausing some of their longer-term projects. And that can weigh on the economy over the long run.